Okay. So good afternoon, dear students. How are you all doing? So as far as the topic money market is concerned, we are in the last unit or the last chapter. If you talk about money market in general, the name of the topic is monetary policy. If you remember, if I revise with you the old discussion, then you had done or we had done under monetary market or money market three chapters. Basically, we had planned to do demand for money, supply of money, and monetary policy. Demand, we have done, supply, done, and now we are on to the third topic. And you all know what the third one is. You all know what the third one is. What is it, sir? It's monetary policy written on your screens right away. Okay. So it's again one of those topics which is very easy, but again, it will require some understanding. So let's start right away. Okay. So the first question that comes in mind is, sir, what is monetary policy and who organizes or who announces this monetary policies? What is monetary policy? What is monetary policy? Friends, let me give you another example. Okay, before I try to explain what is monetary policy, let me ask you a question. Friends, as a kid, all of you must have gone to that ride seesaw. Have you seen that seesaw? Yes or no? Let me draw it for you. It looks something of this sort. Yes or no? Where one person sits on this side and the other person sits on this side. Yes or no? Now what happens is generally one person has a greater weight, other has a lesser weight. So generally the seesaw tends to fall towards the person who is heavier. And eventually they lose some weight. If they lose some weight, and then this keeps on going. When it goes down, this goes up, and vice versa. When this goes down, it goes up. Yes or no? Yes or no? Yes, sir. Sir, but what it has to do with our discussion today? जो आज आप पढ़ा रहे हैं उस बात से क्या लेना देना है? What is it related? What is its relationship actually? So my dear students, the relation is just like in a seesaw, two people try to balance each other out. Similarly, our economy is sometimes in the situation of inflation, and sometimes it is in the situation of deflation. When the economy is in inflation, it means what? It means what? Prices are rising. Prices are rising. So prices are going up. So what does the government do? To bring it down, government puts the weight here. This weight is called the monetary policy. Actually, the decision is taken by government, but implementation is mainly done by RBI. So we give all the credit to RBI, that is the central bank of the country. To the contrary, if there is a situation of deflation, that is values of commodities are going down, then government has to increase the weight. On the other side, what does the government do? To balance it further or to increase the money supply, government puts the weight here, increases the money supply. So basically, government is trying to keep, just like these two people are trying to keep the seesaw in balance, government or the RBI is trying to keep the economy stable. So you can compare the stability of seesaw with the stability of economy. The only difference is in the seesaw, these two individuals are attempting. In the economy, again, there are two individuals, government empowered by RBI. So actually work done by RBI. Is that clear so far? Yes or no, friends? So the main goal is to bring about stability in the economy by, changing the monetary supply in the economy, by changing the money available in the economy, by changing the money available in the economy. Is that clear, friends? Is that clear, friends? The goal is stability. How? By increasing the money supply or by pulling up, reducing the money supply. That's it. Is that clear so far? Yes or no? So friends, let's write it down. It is just for the sake of understanding, okay? Monetary policy is a program of action, is a program of action. Monetary policy is a program of action. Monetary policy is a program of action. Action basically decision making. What else? Undertaken by who? By the RBI. Remember, here the key decision maker is RBI. Undertaken by RBI in our country. Undertaken by RBI to control and regulate the demand for and supply of demand for and supply of money with the public and flow of credit and flow of credit with a view and flow of credit with a view to achieving and flow of credit with a view to achieving macroeconomic goals with a view to achieving macroeconomic goals with a view to achieving macroeconomic goals with a view to achieving macroeconomic goals. Right. So what is monetary policy? A program of action undertaken by RBI. I repeat, undertaken by RBI. It is a very important question as far as MCQ is concerned, to control and regulate the demand for and supply of money, which we have discussed already, with the view with the public and flow of credit with a view. Flow of credit means the money available in the economy to achieve macroeconomic goals. To achieve macroeconomic goals. I hope everybody has copied it and understood it. सर हिंदी में बताइए दोस्तों, मॉनेटरी पॉलिसी कुछ नहीं, केवल एक ऐसी पॉलिसी है जिसके दरमियान आरबीआई क्या तो इकोनॉमी में मनी को बढ़ाता है या मनी सप्लाई को घटाता है, जिससे इकोनॉमी स्टेबल रहे, बैलेंस्ड रहे. सीधी बात, नो बकवास. क्लियर है सभी को? And sir, one question is very common among students. Sir, where will the questions in ICAI exam come from for the foundation level? My answer is very simple. See, I don't set the paper, but I am confident about one thing. If you do two things, you are confident to do well. You are confident to do well in your exam. The two things are, number one, attending the classes that we are conducting regularly, consistently. Number one. And number two, after the class, just reading once or twice the ICAI material, study material. Bas. Beyond this, since I've been taking classes for so long now with ICAI, so trust me, this formula has worked every time. Two things. Number one, attend the class regularly. Number two, institute material, read. That's it. Apart from that, no third thing is required. All right, great. So now, friends, let's discuss the objectives of monetary policy. Let's discuss the objectives of monetary policy. Okay, so what are the objectives of monetary policy? There are generally four main objectives that we are going to talk about. Four main objectives of monetary policy. Because ICAI can give one, like three objectives and one something from outside. So which one of them is not an objective, ICAI can ask. So the fourth one you will have to mark. Understood? So that's why I'm writing this down. Four main objectives of monetary policy in our country. Four main objectives of monetary policy in our country. What are the four main objectives? Number one, you all guessed it correct. Economic growth. Very good. Maintaining economic growth. Maintaining. It is about maintaining economic growth. It is about maintaining economic growth. Now see, the investment sectors, that is the productive sectors, they need money for investment. So ensuring that they get loans. So ensuring flow of credit to productive sector, that is the firms. Ensuring flow of credit ensuring flow of credit to the productive sector, ensuring flow of credit to the productive sector, ensuring flow of credit to the productive sector, ensuring flow of credit to the productive sector. When I say, friends, flow of credit, when I say flow of credit, I mean flow of money. When I say flow of credit, I mean flow of money, ensuring flow of credit to the productive sector. When I say credit, I mean money, that is the loans, so that they can conduct business. Next, you know, if you keep the interest rate too high, people will not take loans and investments will be discouraged. So to keep the interest level at such interest at such levels that investments are encouraged. Moderate interest rates, maintaining moderate interest rates, maintaining moderate interest rates, maintaining moderate interest rates. I am sorry, maintaining modern interest rates, maintaining moderate interest rates to encourage investment, जिससे लोग इकोनॉमी में इन्वेस्ट करना चाहें, to encourage investment. And friends, the fourth and the last thing is to create a market for buying and selling of government securities. Sir, come again. To create a market for buying and selling of government securities. Sir, once more. To create a market for buying and selling of government securities. Sir, once again. To create a market for buying and selling of government securities. So create a market. Creating a market for government securities. Creating a market for government securities. Creating a market for government securities. Is that clear? Yes, sir, that is clear. So what is monetary policy? Friends, it is a program of action. It's a plan of action undertaken by who? By the RBI to regulate what? The flow of credit, the demand and supply. All right, of money, of course. Four main objectives: economic growth, to encourage investments, to maintain interest rate for the productive sector, and finally, to create a market for government security. Sir, what are government securities? You can say government bonds. These are just like, you can say, like shares, like debentures, which, and you have done that in accounts. You know, you have done that in accounts. What are shares and debentures? So exactly like that, government bonds are basically sold, bought and sold. Why, sir? What is the goal, sir? That we are going to soon understand. But before that, is this much clear to you all? Yes or no, friends? Yes or no, friends? Yes or no, friends? Friends, is this clear so far? Have you noted it down or you have taken screenshots? Please confirm so that I can move further. Need all to reply. Come on, friends. Yes, we will study terms like open market operations, bank rate, liquidity adjustment facility, market stability scheme. Yes, we are going to study that. So don't worry about that. Repo, reverse repo, we are going to do that. I'm just waiting. All right, done, sir. Very, very good. Very, very good. Very, very good. Friends, the next heading is transmission of monetary policy. Friends, next is transmission of monetary policy. Next is transmission of monetary policy. Transmission of monetary policy. Transmission of monetary policy. Transmission of monetary policy. Now let's talk about it, sir. First of all, remember that in an economy, when monetary policy is affected, interest rate is affected. What is affected? Interest rate is affected. And when interest rates are affected, economic activity is affected. Sir, we did not understand. Please come again. Okay. See, if in an economy, money supply increases, right? Then money will be available at lower rate of interest because there is a lot of money in the economy. That means it will be available at low rate of interest. If low rate of interest money is available, then people will borrow more. So demand for goods and services will rise. So see how monetary supply is affecting interest rate, which in turn is channelizing into increased economic activity. To the contrary, if I reduce the money supply in the economy, interest rate is going to rise, which is going to basically translate into reduced economic activity. Yes or no? Yes, sir. This is exactly what transmission of monetary policy tells us. What is it, sir? Number one is that changes to monetary policy affects the interest rate. Number one is that changes to monetary policy affects the interest rate, affects the interest rate. And next, number two is changes to interest rate affects economic activity. Interest rates affects, changes to interest rate affects economic activity. Affects economic activity. Is that clear, sir? Yes, sir, it's crystal clear. Now we are going to discuss about different channels for monetary policy transmission. Okay, channels. Channels means basically how effect of one decision takes a equivalent effect on some other economic activity or some other asset class is affected. We are going to study that. You will understand. Let's put down the heading. Everybody, let's put down the heading. Sir, are we going to discuss institute MCQs also today? Definitely yes, we are going to. But before that, first things first, let's talk about the different channels of monetary policy transmission. Okay, the channels of monetary policy transmission. Channels of monetary policy translation. Channels of monetary policy translation. Everybody, then we are discussing channels of monetary policy translation or transmission. The better word should be transmission, as ICAI has also chosen to use that word only. First, friends, we will discuss some parts from the ICAI mat and then I'll make you write the notes. Then let's open the material, let's discuss the material, and then we will write the summary, the gist of what ICAI is trying to cover. I hope you all will agree. पहले इंस्टीट्यूट के मैट से एक बार अपने कवर कर लेते हैं क्या बातें इंस्टीट्यूट ने हमें बताई है और उसके बाद उसका जिस्ट जो है वो मैं आपको यहाँ लिखा दूंगा. ठीक है, बराबर है? अग्री करते हो? All right. Okay, let's go. So friends, it is here that we are talking about from the institute's material. Channels of monetary policy transmission. 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 Okay, let's go, sir. So friends, the number one channel is savings and investment channel. Friends, the number one channel is savings and investment channel. I'll make you write the crux, but first try to understand. See, if interest rate is low on bank deposits, friends, if you keep the money in the bank and if the interest rate is low on the bank deposit, you all tell me, will you want to keep more money in the bank or less money in the bank? ये आप लोग बताइए मुझे. अगर आपके डिपॉजिट्स पर बैंक मुझे आपको कम इंटरेस्ट दे रहा है, अगर आपके बैंक में डिपॉजिट्स पर बैंक यदि आपको कम इंटरेस्ट दे रहा है, यदि आपके बैंक में डिपॉजिट्स पर बैंक आपको कम इंटरेस्ट दे रहा है, दोस्तों मुझे आप ये बात जवाब दीजिए, अगर बैंक आपके डिपॉजिट्स पर आपको कम इंटरेस्ट दे रहा है, आपका क्या मन करेगा? दो सवाल है। नंबर वन, और ज्यादा डिपॉजिट्स को बैंक में रखने का, या कम डिपॉजिट्स बैंक में रख के खर्चा करने का? इफ the bank is offering lesser interest on the deposits that you have made in the bank, what would you like to do? There are two options in this regard. Number one, you will want to deposit more in the bank, or you'll want to deposit less in the bank and spend more. What is the logical answer? Come on, tell me. See, Anand, Priti, Harsh, Karthik, all these people have given the correct answer. That, sir, of course, if the interest rate reduces on the bank deposits, then we'll want to hold less money. So there is an increased incentive to spend. So if interest rate falls, then the desire to save falls and the desire to spend rises. This is the crux of the matter. Next. But again, if the rate of interest for loans, this is not on deposits. This is not on deposits. This is on loans. If the interest rate on loans is decreasing, then what will happen? Sir, of course, we will be encouraged to borrow more as the rate of interest is less. So demand for assets like housing will rise. Demand for assets like housing will rise. Great, friends. And the third thing is lower lending rates. Lower lending rates can increase investment spending by businesses. For example, if banks offer loan at low rate of interest, then businesses would want to take more loan. Yes, sir, we have understood. So we have understood three things. Number one, about bank deposits, about uh, loans taken by households, loans taken by firms. So let's make a gist of this channel, savings and investment channel. Number one is savings and investment channel. Number one is savings and investment channel. Okay. Savings and investment channel. Is that clear so far, friends? Is that clear so far, dear students? Yes. So point number one I would write is, now I'll make a crux, okay? Because in detail we have done from institute material. So the crux of the matter is, if interest rate on bank deposit, if interest rate on bank deposit, on bank deposits fall, then desire to save falls and desire to spend rises. Yes or no? I am sure 100% of the students will agree. It is such basic discussion going on. It is such basic discussion going on that each of you, dear students, will agree. Okay. Next. Interest rate on loans given to households. On loans given to households. Interest rate on loans given to households. If it falls, then the borrowing for use like housing, because households buy for houses, etc., will rise. Yes or no? This was the third point we understood. And again, the lending rate. This time, lending rate, we are talking about two firms. If lending rate to firms falls, then the loan for investment taken by the firms for business taken by the firms will rise. Yes or no? So friends, that was the crux of the 3 points of savings and investment channel given to us by the institute. First, note it down, friends, before I move on to the second agenda. That is the next channel, because there are 3 to 4 channels in the material that we have. Sir, I'm sure all will agree. If written down, then write down done in the chat so that I can proceed, dear students. So that I can proceed, dear students. Come on, guys. Done? Eh? Right, let's go. Let's talk about cash flow channel now. Friends, let's talk about cash flow channel now. Cash flow channel now. See, now monetary policy influences interest rates. That's correct, which affect the decision of household by changing the amount of cash they have available to spend. This is an important channel for those that are liquidity constrained. For example, those who have already bought up to the maximum that banks will provide. So now cash flow channel is a very important decision. How? I will explain. This was a general explanation. See, a reduction in lending rates, that is the rate of loans, reduces interest repayments on debts. Yes or no? You have to pay interest on debts, increasing the amount of cash available for households to spend on goods and services. It is trying to say the same thing through a different medium now. Through cash flows, they are trying to say. At the same time, a reduction in interest rate reduces the amount of income that households get from deposit, and some may choose to restrict their spending. Sir, can you explain this? Because it seems we feel as if the same point has been given to us. See, yes, the point is same, that if interest rate on deposit falls, desire to save falls, desire to spend increases. But here, savings was used. Yes or no? Or here, the word for investment was used. That's why the name was savings and investment channel. Yes or no? So again, the answer will remain same. The explanation to this entire point will take a different route altogether. Sir, we did not understand. बात यही होने वाला है कि if you are at destination A, you are going to reach destination B only. So if savings and investment channel was a means to explaining the same thing, similarly there is another route, which is the cash flow channel. Hopefully it's crystal clear, everybody. Hopefully it's crystal clear, everybody. Okay. So let's talk about that now. Cash flow channel. Let's talk about this now. Cash flow channel. Cash flow channel. So see, let's again use this to understand what ICAI has told us. See, friends, if interest rate on deposits, try and understand. If interest rate on deposits fall, okay, interest rate on deposits fall, then the cash with people will rise or fall. Will fall because they are getting less interest now. So spending by people will also fall. So same thing has been used, but here cash flow has been used to explain. Initially, we were using savings to explain the same thing. I hope now you understand, everybody. I hope now you understand, everybody. Come on, guys. Next. Number two. Next, number two. See, cash flow channel number one we have done. Number two. Number two. If, pay attention, huh? If lending rates fall, then amount of interest that you have to pay falls. अगर अपने को कम इंटरेस्ट पे करना पड़ेगा, if we have to pay less interest, then the cash flow available with us will of course rise, because now we are having to pay less, so we are having more cash flow. If we are having more cash flow, then spending is going to rise. Yes or no, friends? Understood, not understood? Sir, I will repeat. Interest rate on deposit. And what is interest rate on deposit? It is the money that we deposit in the banks. Okay. If interest rate on deposit falls, that is the money we deposit in the bank. If the interest rate on that falls, then our income will rise or fall. It will fall because we are getting less interest. Or if we are getting less interest, then the cash with us is less. If cash with us is less, then our spending has fallen. But if the lending rates fall, lending rates means the rate at which loans are granted to us, then interest amount we will have to pay less. If we are having to pay lesser interest compared to the previous times, then the cash remaining with us has increased, indirectly savings, and therefore we can spend more. Understood, everybody? It's absolutely correctly written. Understood, everyone? कैश फ्लो विद अस, हमारे पास जो कैश बचेगा उसका बात कर रहे हैं. कंफर्म करें सब कोई. Okay, great. Now, friends, one important thing. What is written? A reduction in interest rates. If interest rate falls, spending will rise. Yes or no? Yes. That is what we have discussed. That is what we have discussed. Now we are going to discuss the third channel, that is the asset price and wealth channel. We are going to discuss the third channel, that is the asset price and the wealth channel. That is the asset price and the wealth channel. Okay? Understood? लेंडिंग रेट वो रेट होता है जिस पर बैंक हमें लोन देता है. मूविंग ऑन. Asset prices and wealth channel. Pay attention. Asset prices and people wealth influence how much they can borrow and how much they can spend. See how? Let's discuss. See, if the interest rates are low, then demand for assets will increase. Then demand for assets will increase. Because if the interest rate is low, then people will be able to afford those assets, like houses and equities. Now, let's turn up the discussion. If the asset prices are high, then you all know, friends, that if you want to take loan from the bank, you have to mortgage that asset or put that asset as a collateral. So if the asset prices rise, then the collateral that is available for bank increases. For example, if I have a house of 1 crore and you have a house of 2 crore, then what will happen, friends? If I go to the bank and give my house as collateral, I will get, let's say, 80 lakhs. For example, if you submit this as collateral, that is this property, you might end up getting, let's say, 1.7 lakhs. Just for example, what I am trying to convey here is that more the value of the asset, more the amount you can get in the form of loans by putting that asset as a collateral. जितना ज्यादा असेट का कीमत होगा उतना ज्यादा प्रॉपर्टी का वैल्यू आप गिरवी रख के उतना ज्यादा अमाउंट ऑफ लोन बैंक से ले सकते हो। कुल मिलाकर ये बात मैं आप लोगों को कह रहा हूं, उम्मीद है क्लियर रहा होगा। बात समझ में आई, हाँ या ना बताइएगा। पहले देखिए सेकंड पॉइंट में मैंने क्या बताया आपको, इंटरेस्ट असेट का प्राइसेस को कैसे, असेट का डिमांड को कैसे अफेक्ट करेगा। सेकंड में मैंने बताया असेट कैसे लोन को अफेक्ट करेगा। क्लियर है क्या, हाँ ना बोलिए। यस, राइट। And finally, an increase in asset price increases wealth of the people. This can lead to higher consumption and higher investment, housing investment, as household generally spend some share of an increase in their wealth. Understood? So let's talk about that. Let's talk about that. So see, asset channel. Now what we are using? We are using asset and wealth channel to understand the whole thing. Asset and wealth channel we are understanding here. Okay? Asset and wealth channel. So the first point is very simple. First point is very common sense based discussion. First point is it is very common sense based discussion. First was savings and investment channel. Cash flow channel is second. Asset and investment wealth channel is third. So what is it trying to tell us? Number one, if interest rates means interest rates on loan that you have taken. If the interest rate of loan falls, what will happen? It will become easier to take loan. It will become easier to take loan. So you will take loan and buy houses. So the first point is demand for assets like housing will rise. Demand for assets like housing will rise. Yes, sir, it's clear. Next, let's move on to second point. If, now pay attention. If asset prices rise, pay attention. If asset prices rise, 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 pay attention, huh? What I'm saying, if asset prices rise, price of the asset has increased. Okay. Then the amount of collateral that you can give to the bank has increased. So the amount of loan in exchange of this asset that you can take has also indeed increased. Yes or no, friends? That's the second point. And the third point, we are writing the crux of what institute is trying to tell us. Okay. Third point is very common sense based. See, asset like the house we own is our wealth. So if asset prices rise, then wealth of individuals also rise. Very common sense based discussion. Very common sense based discussion it is. Yes or no? Friends, is that clear so far? Yes or no? Come on, guys. Come on, friends. Is that clear so far? Asset and wealth channel is clear. Yes or no, guys? Good. Beautiful. Now, moving on to the fourth point. Now, let's move on to the fourth point. Let's move on to the fourth point. Let's see what it is. It is the exchange rate channel. It is the exchange rate channel. It is the exchange rate channel. Exchange rate channel. See, first of all, remember, this channel will only affect people who have some business in imports and exports. So अगर मैं import या export करता ही नहीं हूं तो मेरे को नहीं लगता exchange rate channel कोई affect करने वाला है. I repeat, exchange rate channel affects only those people. Exchange rate channel affects only those people. Exchange rate channel affects only those people who have the business of import or export. So export oriented or import have competition from imported goods. Bus, it will affect only these two people. So now, first, sir, what is exchange rate? It is the rate at which currency of one country can be exchanged with currency of another country. I will give you an example. First, let's put the heading exchange rate channel. Exchange rate channel. Okay. Now let's talk about it. What is exchange rate, sir? So the question is, what is exchange rate, sir? Friends, exchange rate is the rate at which currency of one country can be exchanged with currency of another country. Suppose for example, I say $1 is, let's say, rupees 80, for example. Of course, there is some fluctuation always happening, for example. So friends, when I say $1 equal to rupees 80, so consider dollar as a product. In order to buy this product that is $1, I have to pay 80 rupees. That is what exchange rate is. Yes, sir. And sir, who does it affect? Who does it affect? Exchange rate channel affects two categories of people. Two categories of people. Number one, if you have an export business, and number two, if you have some competition from imports. If you have some competition from imports. If you have some competition from imports, only this situation exchange rate channel is going to affect. Otherwise, I don't see any, effect anyhow. Is this clear, friends? Yes or no? Come on, guys. Is that clear, guys? Come on. Great. Great, 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 great. So this is what exchange rate channel is all about. Now, we talk about the exchange rate channel in a little more details because I hadn't explained the details to you all. Okay. See, if Reserve Bank lowers the cash rate, now when I say cash rate, it means the exchange rate. When I say cash rate, it means the exchange rate. जब भी मैं बोलूं cash rate, इसका मतलब exchange rate है. It means that interest rate in India have fallen compared with interest rate in the rest of the world. For the time being, try to understand that if exchange rate reduces, money, what does it mean, sir? Means $1 has become, exchange rate has fallen. Exchange rate. So suppose exchange rate was $1 is rupees 80. So exchange rate has fallen means $1 has become, let's say, 75 rupees. Okay. So now rupee has become costlier. So now rupee has become costlier. It means that interest rates in India have fallen compared with interest rates in the rest of the world. Just remember, there is there are three kinds of, when you move to intermediate level na, there is a concept in financial management in intermediate or final level which is called forex market, where you will talk about purchasing pricing parity. Okay, so try and understand. If interest rate is low, if interest rate in India is low, it reduces the returns investors earn from assets in India. So low returns reduces demand for assets in India and people invest abroad. For example, in India, if I invest, I am earning 5%. In abroad, I am earning 8%. So where will I want to invest more? In abroad. That is what I am trying to say, or what this book is trying to say. What is this? What this is what book is trying to say. Okay. Okay. Next, a reduction in interest rate results in a lower exchange rate. See, that is what I told. A reduction in interest rate in India results in a lower exchange rate. Results in a lower exchange rate, making foreign goods more expensive compared with those produced in India. Sir, how? We did not understand. Sir, how? We did not understand. I'll tell you. Listen carefully. Okay, pay attention. Okay. Suppose, friends, $1 is rupees 80. Okay. $1 is rupees 80. Now, if I have to buy a product costing $1,000, $1,000, what will I do? I will have to pay rupees 80,000. How? Because $1,000, so 1,000 into 80. Now, friends, I'll show you two impacts. I'll show you two things: appreciation and depreciation. Let's make $1 as 75 rupees. Another thing, let's make $1 as 85 rupees. Two scenarios, it comes in front of you. दो चीजें आपके सामने आ गई. अब, if I want to buy something worth $1,000, okay, if the exchange rate becomes 75, then I would have to pay 75,000 rupees. So when exchange rate has gone to $1 equals to 75 rupees, then this is the scenario when rupee has become expensive. When rupee has become expensive. When rupee has become expensive. But here, for $1,000 product, you will have to pay 85,000. This has become when rupee has become cheaper. This is when rupee has become cheaper. This is because rupee has become cheaper. Here, when rupee has become expensive. When rupee has become expensive. When rupee has become expensive. But now, first of all, yahan tak it is clear. First of all, yahan tak is it clear? Yes or no? Yahan tak is it clear? Yes or no? Come on, everybody tell me. So I will tell you the next thing. So I will tell you the next thing. First, clear. Is this clear so far? Yes or no? Confirm that first. Is this clear so far? Yes or no? Come on, guys. Yes. See, pay attention now. What I am trying to say is, people are telling that, sir, product has become cheaper here. You have not understood. मैं बोल रहा हूं रूपी, मैंने क्या लिखा है? I have written rupee has become expensive. I have written rupee has become expensive. How? How rupee has become expensive? Because for $1, you had to pay 80 rupees. Now for $1, you have to pay only 75. So rupee has become expensive. I am not talking about product. Arey, product has become cheaper. Very good. Try to understand what I have written. This is why you will be called chartered accountants to read. And to read, you need to see. I have written rupee has become expensive. I have not written product has become expensive. Listen carefully. Okay. And if $1 is 85 rupees, then rupee has become cheaper. Product has become expensive. That's all right. Product has become expensive. That's all right. First of all, is that clear? Now, what do I want to happen? I want, what do I want to happen? I want, I want, please pay attention. I want this scenario to take place. That is $1 equals to 85. Sir, why, sir? So that people don't import, or people import less, or people import less. Why? Because if people think that the product has become expensive, if they buy it from outside, then they will buy it from India na. Then they will buy it from India na. So this is the scenario I wanted to explain. Government tries to do this. Government tries to achieve this so that imports from foreign countries become more expensive. But when does rupee become cheaper? When does rupee become cheaper? Apply some common sense. Rupee becomes cheaper when interest rate falls. Then it is when it becomes easier to borrow money. That is Indian rupee. Is that clear now? रुपी हैज बिकम एक्सपेंसिव का मतलब रुपया का वैल्यू बढ़ गया. रुपी हैज बिकम एक्सपेंसिव मींस वैल्यू ऑफ रुपी हैज रीजन. लेट मी पुट इट दिस वे. Value of rupee has risen because now I am only having to pay 75 rupees for $1. Initially I had to pay 80 rupees for $1. So dollar का इज्जत पहले ज्यादा था. Dollar commanded more respect. Compared to this scenario, rupee commands more respect. In this scenario, rupee commands even lesser respect than here. Understood or not understood? So to sum it up, I will once again express this in simple Hindi and then we will move forward. देखिए, पहले $1 ₹80 था. अगर $1 75 होता यानी 75 होता तो वही सामान जो $1000 का 80,000 में मिल रहा था वो 75,000 में मिल जाएगा. तब तो लोगों के लिए सस्ता हो गया बाहर से सामान खरीदना. तो लोग बाहर से खरीदेंगे, इंडिया से क्यों खरीदेंगे? पर अगर $1 को हम लोग 85 85 कर दे, इसका मतलब क्या हो गया? इसका मतलब लोगों को अगर डॉलर खरीदना है तो 85,000 रुपीज देना पड़ेगा. तो डॉलर का इज्जत बढ़ गया, रुपया का इज्जत घट गया, क्योंकि अब $1 के लिए 85 रुपया आपको देना पड़ेगा. तो इसका मतलब है सामान महंगा हो गया. बट सामान महंगा हो गया, इसका मतलब है रुपया सस्ता हो गया. रुपया सस्ता हो गया का मतलब $1 में अब 85 रुपया मिल जाता है. पहले $1 में सिर्फ 75 मिलता था. 85 मतलब 85. इसका मतलब ये है कि अगर $1 हो गया, मतलब रुपया का वैल्यू कम हो गया. रुपया का वैल्यू कम कब होता है? जब रुपया का इंटरेस्ट रेट कम होगा, क्योंकि इंटरेस्ट रेट कुछ नहीं बल्कि एक मनी का ही कॉस्ट है. मनी पाने के लिए आपको कुछ खर्चा देना पड़ता है, उस खर्चे का नाम इंटरेस्ट है. हाँ या ना बोलिए, इतना इनफ है. इज दिस क्लियर एवरीबडी? So that we can write the institute's material crux. So we will now write it down. Now we will write it down. Please have a look, everybody. What is written here? What is written here? If Reserve Bank reduces the cash rate, that is, or focus here. If interest rate reduces, let's write it down. Na? Number one, if interest rate in India is less than interest rate abroad, people will want to invest money abroad. People will want to invest money. People will want to invest money abroad if interest rate in India is less than interest rate abroad. Understood? And the second point, if exchange rate falls, interest rate falls. ER means exchange rate. ER means exchange rate. See, a reduction in interest rate results in lower exchange rate, making foreign goods more expensive. Making foreign goods more expensive. Interest rate falls, making foreign goods expensive. Like here, I'll show it to you. Making foreign goods expensive. Making foreign goods expensive. You see here it has happened. Because of fall in exchange rate, that is the fall in rupee, the product has become more expensive. That is, it has become now 85,000. So foreign goods have become more expensive. Yes or no? And this is because interest rate had fallen. Understood? I have connected the whole thing now. Yes, sir. So exports will rise if interest rate, exchange rate fall, interest rate fall, making foreign goods expensive. So exports will rise. Exports will rise. Imports will fall. Exports will rise. Imports will fall. Friends, exports will rise and imports will fall. Exports will rise, imports will fall. Online, everybody, is this clear so far? Yes or no? Come on, guys. Come on, everyone. Is that clear? Sir, how exports will rise? Sir, very good question. Let me explain. Suppose $1 is 50 rupees, huh? Suppose. And here I write $1 is rupees 100. Okay. Suppose something in India costs rupees 10,000. Suppose, for example, a product costs 10,000 in India. So if $1 is rupees 50, then of course 1 rupee is equals to 1 by $50. Yes or no? Basically, which translates to 2 by 100 or $0.02. Yes or no? $0.02. Now, this is case 1. Case 2. If this is the case, then 1 rupee equals to 1 by $100. That is $0.01. Huh, Yana? Now, for a person who is buying a product of rupees 10,000 from outside, the person is outside. The person stays in US. Now, if this person has to buy an item of 10,000 rupees, then in US dollars, case one, in case one, they will have to pay how much? This is case one, this is case two. Okay, how much they will have to pay? 10,000 into 0.02. Yes, that would be basically 10,000 into 2 by 100. If I write, it would be $200. But case two, same person for the same commodity will have to pay $100. Yes or no? Because 1 rupee is only $0.01. So see, when we have reduced the value of rupee, जब रुपया को कम किए, रुपया का वैल्यू को कम किए, रुपया का वैल्यू को कम करना मतलब पहले $1 में 50 रुपया मिल जाता था, तो अब $1 में 100 रुपया मिल जाता है. तो इससे रुपया का वैल्यू कम हुआ. जब रुपया का वैल्यू कम हुआ तो इंडियन गुड्स सस्ता हो गया. इंडियन गुड्स सस्ता हो गया तो एक्सपोर्ट्स बढ़ गया. इज दिस क्लियर एवरीबॉडी? यस और नो? कम ऑन गाइस. That is what I have written. Exports rises when the exchange rate, that is the value of rupee, is made to fall. Now I am 100% sure this is crystal clear. I've given so many examples. Now it's crystal clear. Come on, everybody. You or no in the chat box, please. Come on. Okay. So friends, this way we have been able to cover all the 4 channels in the material given by the Institute. Now we will talk about the operating procedures. Operating procedures, when I say about the different quantitative and qualitative techniques, one by one we will study. One by one we will study. Okay, but meanwhile, I am offering you all a 5 to 10 minutes break, and those who have doubts can still ask. I am not going for any break. Okay, those who have doubts, please ask. 5 to 10 minutes break I am giving, but I am still taking doubts. So please ask your doubts now. Go ahead now. In cash flow point one of you are asking, see, interest rate on deposits. मैंने बैंक में पैसे रखे, बैंक मुझे कम इंटरेस्ट दे रहा है, मान लीजिए 10 की जगह 5% दे रहा है, तो मेरे पास ज्यादा कैश आएगा कि कम कैश आएगा, ये बताइए। कम कैश आएगा। तो जब कैश ही मेरे पास कम आ रहा है तो मैं खर्चा ज्यादा कैसे करूंगा, कम ही करूंगा। यही पहला पॉइंट है। Yes, in asset price and wealth channel, Ashinka, the logic is very simple. If interest rate on loans taken is low, then demand for assets like houses will rise. If asset prices are high, then Ashinka, you will have more amount to give bank as a collateral, give to bank as a collateral to take loan. So the amount of loan rises. If asset prices rise, the amount of wealth you is rising. For example, if you have a house, the value of house is rupees 1 crore. So your wealth is 1 crore. If it rises to 1.5 crore, your wealth becomes 1.5 crore. That is it. Hopefully it's clear. Next, Ashinka and this one. Miss Tambeshwari, your doubt has been cleared. Yes, Karthik, you are correct. You are absolutely right, Karthik. Is this clear so far? Next, everyone. Next doubt. I'm ready. I'm just seeing the screen in case any doubt comes up. Maneuvering liquidity condition means Pawan to increase or decrease money supply. Increasing money supply is also maneuvering. Decreasing money supply is also maneuvering. Maneuvering means changing. Liquidity condition means money supply to increase or decrease. Come on, guys. If no other doubt remains, then in the next 2 minutes, I'll start. Monish, when you change from $1.80 to $1.75, it is not that the value of rupee has gone down. It's rather value of rupee has gone up. थोड़ा सोचिए कि अगर $1 में ₹80 मिल जाता, अब $1 में खाली 75 मिलेगा, तो रुपया का वैल्यू बढ़ा ना, घटा कहां से? So your example is only wrong, Monish. Okay, let's go then. Friends, let's go then. Operating procedure. Friends, these are the techniques used by RBI. First, I'll talk about the major techniques, and then we will talk about the rest. Okay. Since it's an MCQ examination, so mere understanding is enough. Mere understanding is enough. You don't have to, follow the process of rote learning and remember each one by heart. Okay. Just the minimum conceptual clarity is enough. Okay. So let's see quantitative techniques and qualitative techniques. What do we got here? Okay, so let's talk about the quantitative and the qualitative technique. The quantitative techniques uses techniques like bank rate, bank rate, cash reserve ratio, statutory liquidity ratio, statutory liquidity ratio. Okay, then there is something called liquidity adjustment facility, LAF, liquidity adjustment facility, that is also called LAF. Liquidity adjustment facility, that is also called LAF. It includes two things, dear students. Number one, it's called repo rate. The other thing is called reverse repo rate. And on the qualitative side, we have something like regulation of margin requirements. We have something like regulation of margin requirements. We have techniques like moral suasion, credit rationing. There are many. I'm just writing a few. Credit rationing, all this. We'll understand each one of them. Just note it down, please. See, I'll tell you all. I'll tell you all. Pay attention and see carefully. I'll read it for you all. Quantitative is bank rate, cash reserve ratio, statutory liquidity ratio. In liquidity adjustment facility, that is LAF, we have repo and reverse repo. And here you have margin requirement, moral suasion, credit rationing. Come on, note it down, please. It's there in the material. So even if you don't note, no harm done. Okay. Here it is. Open market operations is also there. Okay. So we'll discuss each one of them. Not a big deal. Okay. All right. Let's go. First of all, friends, we talk about quantitative techniques. Are you ready? These are the techniques. See, operating procedures, as I told, are used to increase or decrease money supply. You can write in the material if you have, or you can write it in your copy. Operating procedures and instruments are used to increase or decrease money supply. If you had economics in class 12, you had this in your syllabus in a lot of details in class 12, macro portion of economics. Okay, so let's talk about them. Okay, number one is the reserve ratio. Actually, when I say reserve ratio, there are two kinds of reserve ratio. Number one is cash reserve ratio and statutory liquidity ratio, or SLR. SLR or cash reserve ratio. SLR or cash reserve ratio. Sir, what is it? Tell me. Sir, what is it? Please tell me. See, suppose, friends, pay attention, okay? Suppose there is 10,000. Suppose commercial banks receive 10,000. Cash reserve ratio, when I say, it is fixed by RBI. It is fixed by RBI. Who fixes this? RBI. Cash reserve ratio means commercial banks deposits that portion which commercial banks cannot grant in the form of loans. They will have to keep it deposited with RBI in the form of cash. For example, suppose cash reserve ratio is 5%. Okay, generally this is the rate. Suppose 5%. So if it is 5%, friends, that is the amount is 500 rupees. So commercial banks will have to deposit 500 rupees with RBI. So commercial banks are now left with only 9,500, which it can grant in the form of loans. So what happens is during inflation, if we talk about during inflation, when people have a lot of money, जब लोगों के हाथ में बहुत पैसा है, तो the goal is to reduce money supply. During inflation, the goal is to reduce money supply. It is called tightening. It is also called tightening, tightening, tightening. And deflation. During deflation, people are purchasing less. So goal is to increase money supply. We have discussed this initially, yes or no? Goal is to increase money supply. So it is called loosening. It is called loosening the money policy. Loosening the money policy. So now, friends, during inflation, cash reserve ratio is increased. Why? So that commercial banks can grant less money as loans. अगर सीआरआर बढ़ा देंगे तो कमर्शियल बैंक के पास कम पैसा बचेगा, तो कम पैसा लोन के रूप में दे पाएगा. और इन्फ्लेशन के टाइम हम यही तो चाहते हैं कि कम पैसा इकोनॉमी में जाए. और यदि डिफ्लेशन है तो सीआरआर को घटा देंगे, जिससे इकोनॉमी में ज्यादा से ज्यादा पैसा जाए और आरबीआई के पास कम से कम पैसा आए. उम्मीद है बात क्लियर रहा होगा. आई होप एवरीबडी इज क्लियर व्हाट आई हैव सेड सो फार. यस और नो? कम ऑन गाइस. Yes, sir, it's clear. Okay. Now, friends, we talk about the next one. What is it in the material? Statutory liquidity ratio. Statutory liquidity ratio. See, इट इज मच लाइक कैश रिजर्व रेशियो. एक ही फर्क है, कैश रिजर्व रेशियो को कैश के रूप में आरबीआई के पास जमा करवाना पड़ता है, जबकि स्टैट्यूटरी लिक्विडिटी रेशियो गोल्ड या बाकी गवर्नमेंट सिक्योरिटीज के रूप में भी हो सकता है. अगेन दिस कैन नॉट बी ग्रांटेड एज लोन. सो ड्यूरिंग इन्फ्लेशन एसएलआर इज ऑल्सो इंक्रीज्ड. सो सेम विथ एसएलआर. तो same with SLR. During inflation, it is increased. During deflation, SLR is decreased. The only difference between CRR and SLR is that CRR is maintained in the form of cash. SLR is maintained in the form of gold and other liquid securities. CRR has to be deposited with RBI. SLR, commercial banks can keep with themselves. Just do not grant it as loans. That's it. That is the major difference that arises. Friends, next is open market operations. Mind you, we are discussing quantitative tools. Open market operations. Friends, what we are discussing is open market operations. Open market operations. Open market operations. Simply open market operations means buying and selling of government securities. Buying and selling of government securities in the open market by RBI. Buying and selling of government securities in the open market by RBI. Buying and selling of government securities in the open market by RBI. So now what happens is, please pay attention. Suppose there is inflation. What is the goal during inflation? You all tell me. To increase the money supply or to reduce the money supply? You all tell me. What is the goal during inflation? Of course, you are correct. Of course, you are correct. The goal is to reduce money supply. The goal is to reduce money supply. During inflation, the goal is to reduce money supply. So, what RBI does is, RBI sells government securities at this time, during inflation, that is. Why? In the open market. How? Now, how does it work? Basically, when government is selling the shares of government, when RBI is selling the shares of government in the open market, people are giving their money to RBI. So economy में money कम हो रहा है कि नहीं? That was the goal, to reduce money supply in the economy. Oh, and during deflation, what happens? During deflation, what happens? Government repurchases the loans granted to, or the sold shares. So basically, government or RBI, you should say, RBI buys securities back from people. Government securities back from people. In this way, people get their money back so that they can buy. Because during deflation, you want to increase the money supply. Understood or not understood, everybody? A very important discussion indeed. So open market operation, during inflation, sell government securities. During deflation, buy government securities. Yes, you are correct, everyone. Anuj, correct answer. Priti, correct answer. Kinjal, correct answer. Sakshi, good. Is that clear so far, friends? Yes or no? Come on. Now we talk about the qualitative tools. Now we talk about the qualitative tools. Qualitative tools. Number one is regulation of margin requirements. Number one is regulation of margin requirements. For this, I have to go to my copy again. Qualitative tools. Qualitative tools. Qualitative tools. It is number one is regulation of margin requirements. Number one is regulation of margin requirements. Sir, what is margin money? Friends, now let me ask you a question so that the thing will be even more clear. Okay, let's see. Okay, let's see. You mortgage 10 lakhs rupees house. You mortgage 10 lakhs rupees house with, let's say, a bank, let's say SBI bank, है ना, for example. My question to you is, when you do that, SBI is going to grant you money. My question to you is, how much? My question to you is, how much? Meaning, sir, what do you mean, sir, when you ask this? What I mean is, when you give 10 lakhs mortgage to SBI, I have three options for you. Sir, if I am mortgaging a house of 10 lakh rupees, SBI, come on, tell me, what do you think is the money that SBI is going to give you? क्या लगता है आपको? Correct. Less than 10 lakh. Suppose, very good, correct. Example, SBI gives you 8 lakhs for a house that I have mortgage of 10 lakhs. So the difference is called margin money, which is fixed by who is setting this? RBI is setting this. So margin money is 20%. Achha. So margin is equals to, so margin money is the difference between the mortgage property value, is the difference between the mortgage property value minus amount of loan granted by RBI minus amount of loan granted by RBI. That difference is called margin money. That difference is called margin money. Is that clear, dear students? Come on. Yes. So what I say is, if it is inflation, the goal is to reduce money supply. So during inflation, RBI will raise the margin percentage so that people get lesser amount of loans. कम लोन मिले आपको, क्या पता 10 लाख के बदले आपको 7 लाख का ही लोन मिले, 10 लाख के घर के बदले आपको 6 लाख का ही लोन मिले. That is the goal during inflation, to reduce money supply. Oh, so margin money is raised, and during deflation, you have understood now, margin money is reduced so that people get more money. Of course, it's crystal clear. Come on, everybody. The main crux is, during inflation, marginal money is risen. During deflation, margin money is reduced. Come on, is that clear? Come on, guys. Yes, very good. So it's clear to us. So I have cleared the first point, margin money. Next is very easy. This is moral suasion. Moral suasion basically means RBI issues reports and journals and requests the commercial banks to either increase the money supply or reduce. So moral suasion is nothing, just a letter that is given to the different lending institutions like SBI, HDFC, that is the different banks. Yes, sir, it's crystal clear to us. Yes, sir, it's crystal clear to us. Next, sir, there is bank rate, repo rate, reverse repo rate. Let's try and understand. These are all coming under market stabilization schemes. Okay, different policy rates. Okay, under MSS, market stabilization schemes. Okay, so let's talk about the two. The rates. One is bank rate. One is liquidity adjustment facility. Friends, we we means people like me and you. We means people like me and you. We take money from where? In the form of loans. Sir, we take it from commercial banks. From where? From where? Sir, commercial banks. कहाँ से? Commercial banks. Sir, from where? Sir, from commercial banks. Where do we take money from? Sir, we take money from commercial banks. I ask again, my question is, sir, where do we take money from? Correct. Sir, we take money from commercial banks. Sir, we take money from commercial banks. We take money from commercial banks. Good. Very good. But if commercial banks need money, where does it take it from? Correct. RBI. Exactly. Bank rate is the rate at which rate means rate of interest. Bank rate is the rate of interest. Bank rate is the rate of interest. Bank rate is the rate of interest at which RBI grants loans to commercial banks. To commercial bank. Friends, this comes into play when generally the loan taken by RBI, when generally the loan taken by RBI, when generally the loan taken by RBI, when generally the loan taken by RBI is for, I mean, the loan granted by RBI is for long term. But when we talk about short term loans, we talk about this facility, liquidity adjustment facility. First difference. So now, if it is inflation, bank rate RBI increases so that commercial banks are unable to take more money. Because commercial banks will be afraid, na, ki, oh my God, the interest rates are so high. Just like is our attitude, same is commercial banks' attitude. And during deflation, when RBI wants to increase money supply, then bank rate is reduced so that people take, so that commercial banks take more loans, so that people eventually get more loans. Because what are commercial banks going to use this money for? Of course, for lending it to people. Come on, guys. Is that clear so far? Yes or no? Yes, sir, it's crystal clear. Yes, sir, it's crystal clear. Okay, great. Now we talk about liquidity adjustment facility. See, it is composed of two parts. One is repo rate, other is reverse repo rate. One is repo rate, other is reverse repo rate. Repo rate, reverse repo rate. See, repo rate is also the rate. Simply speaking, Repo rate is also the rate. Acha, by the way, what is the full form of repo? Repurchase option. First of all, write down. Repo full form is repurchase option. Short. So repurchase option, and reverse repo is reverse repurchase option. Reverse repo is reverse repurchase option. Reverse repurchase option. Reverse repurchase option. Repo rate is repurchase option, and reverse repo is reverse repurchase option. Okay. Now, friends, pay attention. By the way, I have told you bank rate is the rate at which RBI grants loans to commercial banks for long term. Okay. Now pay attention. Repo and reverse repo. Repo is repurchase. Reverse repo is repurchase option. Reverse repurchase option. Now repo rate is also the rate at which RBI lends money to commercial banks. So sir, tab to it is the same as bank rate? No, it is for short term. 7 days, 14 days, something like this. Basically what happens is commercial banks sells its securities for suppose commercial banks sells its securities for rupees 10,000. This is HDFC Bank, and it sells it to RBI. Now 14 days later, commercial bank will buy back this security from RBI, suppose for 11,000. For example, so the balance, the difference 10% extra that it had to pay, it is the repo rate. And that is why it is called repurchase option. That is, you are selling. You means the commercial bank is selling the shares to RBI by agreeing to purchase it on a later date at a higher price. That covers up for the interest. Understood? So simply, during inflation, what will happen? The main question for which you will get marks. During inflation, of course, repo rate is also like a loan rate, like bank rate. So during inflation, repo rate will be increased so that commercial banks are discouraged from taking money from RBI. And during deflation, repo rate is reduced so that commercial banks take more money, because जब commercial bank के पास ज्यादा पैसे होंगे तब लोगों को ज्यादा पैसे मिलेंगे ना. Yes or no? Come on, everybody. Is that clear? Yes or no? Come on, guys. Is that clear, friends? Friends, now we will talk about reverse repo. Now we will talk about reverse repo. First, repo is clear. Let me check. Correct. Now, reverse repo. Now, suppose commercial banks have extra money saved. Reverse repo, I will write here. Okay. Reverse repo. The role reverses. Now, RBI sells securities to commercial banks, sells securities to commercial bank, and purchases it at higher value. The difference is called reverse repo. See, when is this used? Suppose commercial banks have extra money left. So reverse repo is the rate at which commercial banks deposit their money. We individuals, we human beings deposit our money with commercial banks and we get interest. Similarly, if commercial banks have extra money, then they deposit it with RBI. In return, the rate of interest offered by RBI to commercial banks for the deposits made by commercial banks is called reverse repo. Is that clear, everybody? And during inflation, reverse repo is increased. During inflation, reverse repo is increased. During inflation, reverse repo is increased. Friends, during inflation, during inflation, reverse repo is increased. Why, sir? See, if RBI increases the rate, then commercial banks will feel that instead of giving the money to the public, let's give it to RBI, as RBI is giving us more interest on our money. Yes or no? Yes or no? Yes, sir. So in inflation, reverse repo is increased so that commercial banks feel tempted. कमर्शियल बैंक को लालच आएगा कि हम पैसा आरबीआई के पास रख दे, क्योंकि आरबीआई ज्यादा इंटरेस्ट दे रहा है। अरे यही तो गोल था कि इकोनॉमी में मनी जाने से रोकना इन्फ्लेशन के टाइम पे। इकोनॉमी में मनी जाने से रोकना है इन्फ्लेशन के टाइम पे, यही तो करना है। ओ हाँ। एंड इन डिफ्लेशन टाइम, reverse repo is reduced. In deflation time, reverse repo is reduced, and hence this is the game that is played. Friends, is this clear? Yes or no? Repo rate is same as bank rate, just that bank rate is for long term money, the rate at which RBI gives money to commercial bank, and repo rate is short term loan taken by commercial bank again from RBI. Bus, that is it. रेपो रेट वो रेट है जिस पर आरबीआई कमर्शियल बैंक्स को लोन देता है। बैंक रेट भी वही है, फर्क है कि बैंक रेट जो है वो लॉन्ग टर्म लोन्स के लिए, रेपो रेट शॉर्ट टर्म लोन्स के लिए। खत्म हो गया कहानी। नाउ फ्रेंड्स, लेट्स सॉल्व द बैक क्वेश्चंस, बट बिफोर दैट द लास्ट पार्ट, the organizational structure for monetary policy decisions. Basically, RBI has to make some quarterly reports. It is what is given here. See, the central government has notified 4% consumer price index inflation as the target for a period from August to March 31 itna, with the upper tolerance of 6% and the lower tolerance to 2%. That is, inflation should be between 2 to 6%. That is the goal. Actually, that was the goal because it is for 21. RBI is mandated, compulsory by the central government, publish a report every 6 months explaining why the inflation is taking place in India and what are the estimates of inflation for the upcoming 6 to 18 months. RBI has to compulsory give it. RBI has to compulsorily give it. The following factors are notified by central government as constituting a failure to achieve the inflation targets. The average inflation is more than the upper tolerance level for any 3 quarters. For example, upper limit is 6%. If inflation for 3 quarters, that is 9 months, is 7%, 8%, 9%, it will be regarded as failure by RBI. It is RBI's failure. It is regarded as a failure by RBI. Or the average inflation is less than lower tolerance. So if it is 0.5%, 0.6%, that is, it is less than 2%, then also it is a failure. And now, who is taking up the responsibility? RBI was amended on RBI Act was amended on June 16 for giving a statutory backing to the Monetary Policy Framework Agreement and for setting up a Monetary Policy Committee. The Monetary Policy Framework Agreement is an agreement reached between the government and RBI. So, agreement between government and RBI, if institute asks, remember it is Monetary Policy Framework Agreement on the maximum tolerable inflation rate at which RBI should target to achieve price stability. Understood? So the name of agreement is, write down, Monetary Policy Framework Agreement. Monetary Policy Framework Agreement amended in 2016. Monetary Policy Framework Agreement. 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 Is that clear, guys? Come on, everybody. And one more thing, remember, announcement of an official target range for inflation is known as inflation targeting. Target range means the lower limit, the upper limit is called target. It is set by Government of India consulting RBI once in every 5 years. How long? Once in every 5 years. Once in every 5 years. Inflation target is set once every 5 years. Please remember that. Once in every 5 years. Is that clear, everybody? Now, friends, I think we should dive into some MCQ discussion if that is clear with all. Confirm, everybody. Great. 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 Now, which of the following is the function of monetary policy? To regulate exchange rate and keep it stable? Yes, it's okay. It's okay. Regulate the movement of credit? Yes. Regulate the production and prices? Regulate the availability, cost, and use of money and credit? Yes. So everything is okay, but this is the broadest thing that could take place because it deals with money and credit to all, be it corporate sector, be it exchange rate, be it production, anything. So it is the broadest. Whenever all the options are correct, your answer should be the one that is the broadest of all. The main objective of monetary policy in India is, we have discussed that. We have discussed that. What is the main objective of monetary policy in India? We have in fact discussed that. Ensure economic growth with stable prices. Very important. Main objective of monetary policy in India is economic growth with price stability. Everybody write down in the chat. Economic growth with price stability. 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 Next, the money transmission. Now, everyone, the next one, let's move on to that. The money transmission mechanism, we have discussed it, refers to how money gets circulated. How money gets circulated in different sectors post monetary policy. Ratio of nominal interest and real rates, no. The process or channels, yes, through which the evolution of monetary aggregates affects the level of product and prices. Yes, we have understood in the money transmission mechanism different channels like savings investment channel, the exchange rate channel, the asset channel. Yes or no? The wealth channel. Right, sir. Next, a contractionary monetary policy induced increase in interest rates. Okay, contractionary. See, now pay attention, everyone. Contractionary means the goal is to reduce money supply. Contractionary means the goal is to reduce money supply. Increases the cost of capital and real cost of borrowing for firms. Yes. Increases the cost of capital and real cost of borrowing for firms and households. Yes. Of course, na. If money supply is reduced, okay, then the interest rate is going to rise. It's like price and quantity demanded. If price falls, demand rises. If price rises, demand falls. So if interest rate rises, money supply falls, or vice versa. If money supply falls, interest rate rises. After all, interest is the price paid for money. If money is like a commodity, interest is the price paid for that commodity. Common sense. Now, let's move on to the fifth one. During deflation. What is the goal during deflation? I have discussed it with you all, to reduce MS, to reduce money supply. The RBI reduces the cash reserve ratio. Yes. Yes, absolutely correct. Increases, no. Reduces the CRR in order to contract rate, no. Reduction in CRR increases the money supply. Reduces CRR but increases SLR, no. SLR is also reduced. SLR भी decrease होता है. तो A is the correct option. So far, so good, friends. Yes or no? So far, so good, friends. Yes or no? Moving on to the sixth point. Whenever you are ready. Yes, sir, we are ready. Please shoot. Okay, then let's go. Which of the following is correct? Governor of RBI, in consultation with Ministry of Finance, decide the policy rates and implement the same. Na? No. Let's see what is the next one. While CRR has to be maintained by banks as cash, yes, with the RBI, SLR requires holding of proof by the bank itself, yes. Our commercial banks can hold with itself. No need to deposit with RBI. Absolutely correct answer. Repo rate and open market has no link. So B is the correct answer. Now moving on. Next, moving on to the seventh one. RBI provides financial accommodation to the commercial banks. Financial accommodation means money. Lends money is the simple language. Through repo and reverse repo. Repo and reverse repo falls under liquidity adjustment facility for short-term loans. We have discussed it. All of you got to remember this. Dash is a money market instrument which enables collateralized short-term borrowing and lending through sale repurchase option in debt instruments. Dash is a money market instrument which enables collateralized short term. See, the word short term is the khatarnak term. When it comes to short term, our brain says repo and reverse repo. In India, let's move on to the third point, ninth one. In India, the term policy rate refers to bank rate prescribed by RBI in its half yearly policy statement, prescribed by RBI in its monetary policy. The fixed repo rate policy rate refers to the fixed repo rate quoted for sovereign securities in the overnight segment of the liquidity adjustment facility. Yes. Sovereign means government securities. Next. Reverse repo operation takes place. Reverse repo, remember here RBI is selling and HDFC or commercial banks are buying. Other banks are buying. So see, RBI borrows money from banks by giving them securities. Yes. I told na, here commercial banks are depositing money with RBI. So basically RBI is borrowing money. In repo, RBI is lending money. In reverse repo, RBI is borrowing money. So everybody note it down. Repo, RBI lending. Reverse repo, RBI borrowing. Monetary policy framework agreement. We discussed it right now. We discussed it right now. Maximum repo rate that RBI can charge. Wrong. Maximum tolerable inflation rate that RBI should target to achieve. Yes. Repo, reverse repo, no. Under monetary policy framework agreement, it is an agreement between the government and the RBI targeting the maximum and the minimum level of inflation rate that should be maintained, set once every 5 years. Set once every 5 years. Number 12th, an open market operation is an instrument of monetary policy which involves buying or selling of what? Government securities. Which involves buying and selling of what? Government securities from or to the publics and banks. In open market operations, what are bought and sold? Government securities are bought and sold. In open market operations, what are bought and sold? Government securities are bought and sold. Bought and sold. Government securities are bought and sold. Government securities are bought and sold. What are bought and sold? Government securities are bought and sold. Which statement is true about Monetary Policy Committee? Okay, very easy question it seems. RBI Act 19 was amended on itna, okay, for giving a statutory backing in the monetary and for setting up a monetary policy committee. Let's see. The monetary policy shall determine the policy rate through debate and majority vote by a panel of experts required to achieve the inflation target. Okay, let's see. This one is correct. This one also is correct. The inflation target, okay, shall determine the monetary policy committee shall determine the policy rate through consensus from the governor of RBI, shall determine the policy rate through debate and majority vote. So it would be 1 and 2. 1 and 2 only. That is this one and majority monetary policy committee shall determine the policy rate through debate by a panel of experts required to achieve the inflation target. Majority vote is the system that will be followed. Majority voting system is the one that will be followed, everybody. Majority voting system is the one that will be followed, everybody. Is that clear, friends? Yes, sir. It's crystal clear. So now what I say is, remember this important points that institute has highlighted. Very important summary. Very important summary. If you read this summary, na 5 to 6 marks to is booked from here only. See, under the very important, the marginal standing facility refers to the facility under which scheduled commercial banks. Scheduled commercial bank is again a class of commercial bank specified by RBI, can borrow additional amount of overnight money from the central bank over and above what is available to them during through the LF window by dipping into their SLR portfolio up to a limit. So MSF facility which scheduled commercial banks can borrow additional amount of money. So whenever they talk about additional amount of money, remember marginal standing facility is the answer. Write down additional money. If commercial banks need any additional money, what facility to be availed? Marginal standing facility. What facility? Marginal standing facility. What facility? Marginal standing facility. Any additional facility to be obtained, marginal standing facility to be gone through. Any additional money to be obtained, marginal standing facility. Write down in the chat before I skip to the second point or I move to the second point. Friends, by the way, how many of you in our discussion got full marks? 13 out of 13. Or how many of you got 10 and above? Out of 13, I am saying. Very good. So MSF, additional money. MSF, additional money. Marginal standing facility, एडिशनल मनी. जब एक्स्ट्रा पैसा रेस करना होता है तो अलग रेट लगता है. उस रेट का नाम मार्जिनल और उस फैसिलिटी का नाम मार्जिनल स्टैंडिंग फैसिलिटी है. रेट को एमएसएफ ही बोलते हैं. Wow. Almost all have got 10, 11, something like this. Right. Under the market stabilization scheme, Government of India borrows from the RBI and issues treasury bills or other securities. And again, MSS is when government borrows from RBI in addition to its normal borrowing requirement. Of course, suppose government needs 1 crore, but government takes 1 crore 10 lakhs. So this 10 lakh is the MSS facility, market stabilization scheme. So if government borrows additional money, that is market stabilization scheme. But if commercial banks need more money, then it is market standing facility. I will write it down for you. See, two people can need additional money, or two institutes can need additional money from RBI. Of course, RBI is the printer of money, so RBI will not need money. Additional money from RBI, two kinds of institutes may need. One is your government, one is your commercial banks. If commercial banks take any additional money, this facility is called marginal standing facility. For MCQ point of view, I am writing additional money from RBI if needed. Then for commercial banks, it is marginal standing facility. And if government needs any additional money, that is market stabilization scheme. We call it market stabilization scheme. Market stabilization scheme, first of all. Now I think this will help you a lot. All the confusion is gone. Otherwise, students tend to get confused between MSS and MSF. MSF is marginal standing facility that at which commercial banks borrow additional money. MSS is the facility at which government borrows additional money from the RBI. Hopefully that's crystal clear to all of you. Hopefully that's crystal clear to all of you. Yes, sir. So friends, let me highlight for you again the very important point. Regularly watching the class that we are conducting, regular classes, ICAI Math. I am talking about economics right now. Okay, that is my subject. ICAI Math revision, each line. Even if you skip one line, that is a crime, you can say. Each line you read. This is the success formula for economics. Success is equals to this plus this. Bus. If you want to make it more complicated, you will buy hundreds books from the world. Nothing is needed. I have told you the two things that is needed. It has worked for me or for ICAI for the past few years. It will work for you as well. Okay. So friends, with this, we cover up this chapter. Next class will start with new chapter. That's it for the day. Thank you very much. Goodbye, everybody. Hopefully all your doubts are clear. Okay. Bye bye, everyone. Thank you.